Again, to be fair, Trump is working on the other side of this. He did announce these expedited permitting regimes for, particularly for critical minerals, of which copper is one. Interestingly enough, he specifically included gold on that list. Sorry, silver bulls. He didn't include silver, at least on that list. Now, the one thing I caution silver bulls, though, is be careful what you wish for. If you're all excited, woohoo, silver hit $39, it's headed for 40 and then 50 and beyond. Remember, the silver bulls always say that silver lags gold at first and then more than catches up at the end of the bull market. Where silver more than catches up, you're saying that we're at the end of the bull market. That's very near-term bullish for silver, but afterwards, not so much. Like, I don't want to call the end of this bull market. I just don't think the cycle is over. Therefore, I'm cautious about thinking or even wishing this is silver going to the moon now.
The Trump administration sharpened its focus on critical minerals this week, rolling out measures to extract metals from mine waste and adding a mining expert to its national security ranks. Renowned author of the Independent Speculator, Lobo Tiggre, notes that despite Trump's theatrical style, his focus reveals a clear Fortress America strategy aimed at economic resilience. He highlights the reshoring of manufacturing, mining, and defense sectors as key priorities. Tiggre points out that gold's inclusion in Trump's critical minerals list signals its role in a future financial fortress. He suggests silver's absence may stem from its link to solar energy, which Trump opposes. Silver ranks among the top-performing commodities on the market, with renewed investor interest and strong fundamentals driving prices to their highest in 14 years. The metal is crucial to the technology needed to meet rising global electricity demand, including solar power, electric vehicles, and electronics. Solar demand alone accounted for 17% of last year's total, a threefold increase over the 5.6% from a decade ago. In his outlook, Tiggre cautions silver investors not to mistake recent gains for a market peak, emphasizing the metal's potential to exceed $50 in the long term. He sees no indication that the current cycle is ending, citing sustained central bank gold purchases and rising global defense spending as signals of a broader commodity supercycle. The combination of industrial and monetary demand creates a powerful dynamic. During periods when both factors align positively, silver typically experiences its strongest price appreciation, as witnessed in previous bull markets culminating in the 1980 and 2011 price peaks. Moving forward, Tiggre warns that U.S. deficits have reached wartime levels, contradicting claims of a strong economy. He asserts that belief in the Fortress America agenda shouldn't ignore fiscal reality. Regardless of politics, he argues this agenda has clear investment implications, especially for copper, uranium, steel, aluminum, gold, and eventually silver. Before we dive into LoboTiggre's sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I think that if you look at Trump's behavior, it may seem chaotic. It's often theatrical. Trump just today shows up at the Fed and he pounces on Powell with a piece of paper in his pocket that shows a different number than Powell's expecting. Obviously that was prepared theatrics. But put all of that aside and look at, there is a pattern here. And trying to strengthen the manufacturing, the auto industry. Trump's agenda, as Doomberg puts it, he's really going after military adjacent areas, and the mining and the manufacturing, the auto industry, these all fit that model. And this doesn't mean necessarily that Trump's planning a war, but he's preparing to not be a victim of the wars ahead. And he wants America to be first. He wants Fortress America to be defendable. And that can't happen if the Chinese are making your high-tech military gadgets and you can't even build a tank in your own, turf. Though who knows how long tanks will be useful with the drones. So it's interesting that they are switching to the drones and the tech stack too. The point is, whether you agree with that or not, maybe if you're Chinese, you don't want America first. I don't know. But I do think that this is the bigger thing here. And if you start looking at what Trump is prioritizing and where he digs in his heels and where he doesn't, like this whole taco thing, if it's all part of the deal, where does he backtrack on? Where does he dig his heels on? It seems to me that this is Trump's real agenda. Fortress America. He wants America on top of the 21st century. Or maybe if you're European, you don't want America on top of the 21st century. I'm not passing judgment on that. I'm saying this is my perception of the actual agenda going on here. And I think Trump is willing to exaggerate the truth, maybe depart from the truth, engage in theatrics, whatever it takes to pursue that agenda. Let's put aside judgment on that agenda for a moment. If I'm right, this has investment implications. That's where I want the audience to go with this. And I know I'm going to get Rotten Tomatoes from either side on that, but the importance here is, if your goal isn't ideological, but if your goal is to make money, dear audience, the takeaways is this agenda is hugely commodities intensive. The raw materials for this agenda, whether you're building drones or tanks and the AI stack to go with it, it's going to take a ton of energy. It's going to take a ton of infrastructure materials, Dr. Copper included. So however the tariffs work out, like if he backs off from 50% to something else, or if he sticks with it, however that works out, we're still going to need that copper, right? So if let's say it goes from 50% to 25%, Wall Street might say, oh, yeah, it's better. And copper prices might tank. That would be an opportunity. If you understand the bigger picture here, it doesn't matter. The fact that 25% is lower than 50% doesn't matter given this global geopolitical agenda of building Fortress America and how much bloody copper that's going to take, and steel and aluminum and all kinds of other things. And it's interesting to me that Trump included gold in his executive order on the critical minerals and the whole talk about Fort Knox. And I know that hasn't gone anywhere and Elon's gone now and all that. But just to me, that it was on that list says something about the way of thinking here. In the same way, Trump, I think, wants to build Fortress America to withstand and stay on top in the 21st century. The gold is part of the financial fortress that goes with that. And I think that has investment implications as well. Well, even if you're anti-Trump, don't like Trump, you're on the other side of the table on everything Trump related, fine. Think about what that means for the BRICS countries. And think about what that means for central bank gold buying around the world, which has gone nuts ever since the so-called weaponization of the dollar, which was under Biden, by the way. Like, that is a huge change in the world of finance, and specifically for gold, but more broadly for the world of copper, aluminum, steel, obvious. Gold, financial fortress, obvious. Silver just didn't come into his mind. Maybe, I don't know. If I was a conspiracy theorist, I could say, it's part of the conspiracy to keep the price of silver suppressed. We'll never know that, my friends. Even if that was true, we'll never know. Unless we get a deathbed confession like McNamara by somebody 20 years from now, we're never going to know. But, I mean, to take the bull case for silver, it should have been. It's very important in a number of applications, including medical, including electronics, and of course the photovoltaics. This could be part of the answer. Like if silver's part of the solar panel thing and Trump don't like no windmills and no solar panels, maybe that was it. He don't like no silver because it goes in the solar panels. But I don't think he's an idiot. I mean, he may say silly things on TV because he's a TV personality sometimes. But that would be an ignorant conclusion to reach. I mean, silver is actually important and used in many, many things besides solar panels. And the solar panels are still important, even if you don't want to pave the planet with solar panels. They're still important. So I don't know why it was excluded, Tom, but actually, the silver lining here, if you will, may be that there's sleeper potential in silver. And if silver continues on the tear that it's been on in recent weeks, as you and I speak, that actually gives it more upside than gold on a percentage gain basis. Now, the one thing I caution silver bulls, though, is be careful what you wish for. If you're all excited, woohoo, silver hit $39, it's headed for 40 and then 50 and beyond. Remember, the silver bulls always say that silver lags gold at first and then more than catches up at the end of the bull market. So if you're saying that we're in that part where silver more than catches up, you're saying that we're at the end of the bull market. That's very near-term bullish for silver, but afterwards, not so much. Like, I don't want to call the end of this bull market. And it's not just that I don't want to. I'm not being emotional about what I want. I'm saying I don't see it. I see the central bank buying. I see this commodity super cycle turbocharged by the Fortress America spending. And by the way, Europe is rearming. It's not just Fortress America, right? This is a global trend. And you think the Russians and the Chinese are going to sit on their hands while the US and the Europeans remilitarize? I just don't think the cycle is over. Therefore, I'm cautious about thinking or even wishing that this is it. This is silver going to the moon now. I mean, just on the raw numbers level, the U.S. budget deficit remained in the $1 trillion plus range the entire time of Biden's administration. And now we've just, kicked it up to a higher level. But don't worry, we will cut expenses somewhere down the road. So I mean, this isn't just a national debt clock thing. It's the current spending and the current account deficit that I think is, as I say, these are wartime levels. You can look at the charts. These are like literally World War II type levels of expenditures at the time where, whether it was Republican or Democrat, the powers that be are telling us we have the greatest economy ever. I'm sorry, but this part I just can't go with. I have to call BS on both houses. And maybe you agree with Trump's Fortress America agenda, and you're okay with stretching the truth to achieve this greater good of keeping America on top in the 21st century. And I'm not saying I don't. Please don't pigeonhole me. I'm trying to be objective here and be neutral to the audience. But let's say we agree with that agenda. That doesn't mean that we have to drink the Kool-Aid and say, oh, yes, the things that are obviously untrue are true just because they support our agenda. I don't think you do yourself any favors. And the objective here is to try to be objective and make good investment decisions. So love Trump or hate him, love Lobo or hate him, doesn't matter. If I'm right about the Fortress America agenda, it has clear implications for copper, uranium, steel, aluminum, many things. It also has implications for gold. And eventually, I think it has implications for silver, even if Trump doesn't love silver as much as he should.
Global growth is being revised down. The World Bank, OECD, and United Nations expect global GDP to rise by just 2.3 to 2.4% in 2025, the slowest growth since the financial crisis, except during recession years. Trade tensions, higher tariffs, and policy uncertainty are hurting exports, investment, and confidence, especially in developing nations. However, a global recession isn't the consensus. Forecasters expect slow growth, not contraction. Seasoned analyst Lobo Tiggre warns that Wall Street has dismissed recession risks too soon, despite serious economic concerns. He highlights how massive deficit spending has delayed downturns. Lobo Tiggre views Germany's removal of its debt brake as a short-term stimulus, albeit a risky long-term move. He expects stagflation in Europe due to the interplay of both inflationary and deflationary forces. The German cabinet on Wednesday approved a 2026 draft budget featuring record investment and 3 times as much borrowing as last year as it aims to bolster infrastructure and defense. Europe's largest economy, which has transitioned from a powerhouse to a Eurozone laggard, is shedding decades of fiscal conservatism to revive growth, modernize its crumbling infrastructure, and scale up military spending. Despite macro uncertainty, Tiggre sees a strong opportunity in select commodities, especially copper, due to tight supply and strategic demand. According to him, as long as the commodity supercycle thesis holds, investors must be selective. Metals such as uranium and copper face structural supply constraints, offering significant potential. However, stock picking is crucial. Let's get back to the interview.
The fears have gone unrealized for so long, all of 6 months. Oh, those long and variable lags couldn't possibly be longer than 6 months. Like Wall Street has just gone, risk on. Almost no bears left on Wall Street. Even Mike Wilson, where is he at? JP Morgan, I forget. Famous bear in recent years, finally threw the towel in, which could be a contrarian signal there, Tom. It could, with all the bears gone into hibernation, might be the time to. But here's the thing, and I fell for this too. We look at the reality of what was done in the COVID lockdowns and all the crazy things done since then, and now we've got Trump shock on top of that. And it's easy to make the bear case. Your David Rosenbergs of the world and so on will make that bear case. And it's rational. It makes sense. You look at the reality of the shakeup of the global economy that has really yet to hit the real economy, even just the tariffs. Because of tariff front running, that's just beginning to hit inflation stats. And yet Wall Street is completely sanguine about this. They've written off the risk. If we hadn't had a recession by now, it's not going to happen.
Mhm.
I think that's wrong. I think that fear is reasonable. I think it's still on the table. But don't forget Lynn Alden's fiscal dominance thesis. And this is what I'm saying. I think I got wrong. I thought that we would have had recession by now. And the fact that we didn't, I think, is almost entirely attributable to the fact that the money helicopters never landed. Like my previous recessionary call post COVID lockdowns was, this is bad. It's going to hurt the economy. Bad things are going to happen. But then the powers that be are going to respond with even more free money, right? So there'll be a brief recession and then even more inflation. That was my thesis. It wasn't, the Greater Depression, a la Doug Casey, or, down for the count. It was a scare and then a reflationary boom. What I didn't realize, or what I got wrong, frankly, audience, was that the money helicopters never landed. We ran trillion-dollar plus, if not multi-trillion-dollar deficits in the US the whole time. Even after, the Biden administration was telling us we had the greatest economy ever, somehow we still needed wartime levels of deficit spending. And sorry, Trump fans, but now the new administration is telling us we have the greatest economy ever, but somehow we need to kick the debt ceiling, trillions of dollars down the road into the future and spend all these, I feel like Carl Sagan, trillions and trillions of dollars. Now, these facts just don't square up. So never mind squaring the facts with the rhetoric. The takeaway here is that fiscal dominance really matters. And we've been shown in recent years, how very powerful that factor can be. And so while it might seem like you could say the economy deserves to go into recession from all the bad things that have been done to it, fiscal dominance, the money helicopter says that it's very dangerous to assume that it will. And right now, I don't have a base case for recession at all. I don't have a base case for the economy. I just don't know, Tom. The honest answer is I don't know. Mm-hmm. There's enough scary stuff happening that I could absolutely see the US and the global economies going into official recession. But there's so many money helicopters in the air that I could see the opposite. And I just think it would be a disservice to try to persuade the audience that, I know which way it's going to go. Sentiment in Germany, I just saw the latest sentiment numbers. Like that's been perennially in the toilet for years now. They can't get out. But yeah, I do think that fiscal dominance matters there too. The removal of the so-called debt brake in Germany is huge. If you've maxed out all your credit cards and some bullish bank is silly enough to give you another credit card or increase your debt limit so you can get even, hang yourself even more tightly with the rope, that's bad. That doesn't seem like it's going to end well. But if you've been the one guy on the block who's been, disciplined, keeping debt down to a certain level, you had a debt brake on there where you just did not allow yourself to go over what seemed prudent, and now you release that brake, even if you are imprudent, you're not the guy with the maxed out credit cards. You're the guy that actually has room on your credit cards. So the immediate effect of that is obviously expansionary. Even if somewhere down the road, this turns out to be a very bad idea for Germany and the EU, the piper will come for his due. You've bought yourself a lot of runway by releasing this debt brake. So I'm not really worried about a hard recession in Europe anytime soon. We might see stagflation because, Trump shock is hurting the Europeans as much as it's hurting certain American interests. But then you've got the fiscal dominance. So you've got inflationary pressures and deflationary pressures at the same time. Stagflation results in the middle. And, it might seem to the audience, gee, Lobo, you're telling me you don't know what's going to happen. You're not doing me a lot of good. But I'm telling you, I don't know what's going to happen in these big macro questions. I do have a crystal ball over here. I can whip it out and see what I see if you want. But there are actual takeaways from this. I'm saying that it doesn't matter whether the stagflationary outcome is more on the stag side or the inflationary side. They're both inflationary, right? They're both good for commodities prices as a class and very good for the critical minerals as a subclass, and especially good for the ones that are in short supply, which is not all of them, right? So like I just tossed oil in there because it's obviously important. But unlike copper, where there's just so little in the pipeline that even the best regulations and incentives are not going to instantly create more supply, oil is quite different. Oil has been battling an oil glut for years now. So, be careful. You can't You can't just take the big picture message, oh, this is great for commodities, and just buy everything commodities. Actually, if you're not a good stock picker, maybe betting on the CRB index as a super cycle bet with patience over years to come, maybe that'll work out. It won't give you a lot of alpha, won't give you much hockey stick potential, but if we're right about the big picture, maybe that'll work out. But what I'm saying is there's a lot of money to be made on those specific areas that are obviously going to benefit from the global agenda, not just the Trump agenda, from going from the broader or broadest, commodity thesis to which specific metals or minerals or commodities you're going to bet on. I think you have to be more selective there. And then you have to apply the same thing again within that metal. Like, let's say you pick uranium, which I think is a good one. It also, by the way, like copper, faces structural supply constraints. There are some mines being built now, but after that, there's like nothing in the pipeline for years. So it'll be a while before high prices can help cure high prices again. So anyway, so commodity, maybe a commodity ETF. Metal, you need to be more select. Company, even more selective, and stock selection matters. And maybe I'm tooting my own horn here. Don't believe me if you don't want to, because I'm a due diligence guy. So of course I think stock selection matters. I'm talking my own book, if you will. But I really believe that. It's if you bought nickel companies because they were cheap, the spreadsheet said nickel is cheap, and you bought nickel companies because your general commodities analysis, you would have been suffering over the last few years. It was especially if you chase that big nickel spike. We had a big nickel spike a couple of years ago. If you chase that, I don't know when you're going to come up from underwater. It's been years and you're still underwater.
While uncertainties persist regarding growth, inflation, and policy, the alignment of monetary and industrial drivers supports a strong case for a long-term commodities supercycle. The Sprott report also emphasized silver's rising prominence as a safe haven, like gold during periods of high geopolitical tensions. However, in comparison to the yellow metal, silver presents a much more affordable and potentially higher growth option to investors, it says. Longer term, forecasts for 2040 and 2050 suggest that silver could reach significant levels, potentially above $50, or even higher if the dollar remains the world's reserve currency. As fiscal policy loosens and geopolitical tensions rise, will you position your portfolio to capitalize on the strategic metals powering the next global paradigm shift? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.